Okay, guys, welcome back. This is lecture number 6 of our Management Information series on ACCA Full Academy. And this session, we are discussing the chapter number 2, Bookkeeping and Accounting System. We will explore the fundamental of bookkeeping methods like single entry and double entry system and their role in accurate financial reporting. Next, we will discuss computerized accounting software, highlighting how it streamlines processes, and we also cover the data cycle from placing orders and processing transactions to creating invoices and analyzing data. So first, you have to understand that what is bookkeeping, and bookkeeping as simply is the process of recording all financial transaction, and these will be of a business. So the process through which you are recording all the financial transaction of a business, then that is called your bookkeeping. Let me create a scenario here. Let's say we have a business and the business sells a product, and the product worth is, let's say, 500, and this transaction is cash transaction. So the accounts involved here, the first one is your cash account, and that is your asset. The second one is your sales revenue, and that is your income. So when you sell something, then definitely it means that your cash is increasing. The cash is increasing because you are received money, and the sale revenue is also increased because you earn income. Now, how you will represent this, you will do here like this. You will have a debt, then you will have accounts, then you'll have a debit, and you'll have a credit. So let's say the transaction happened on 26 April 2025. Here you have cash, and the cash is 500, and this is a dollar sign here, and your sale revenues will be again 500. So this is your double entry, and this is called bookkeeping. Now what I will say here, that this double entry ensures that books remained balanced, and this is balanced because the total debit equaling the total credit. Okay, good. Now let's move on. We have to elaborate the concept here. Now the key task in bookkeeping, we'll discuss that. What are the key tasks and in bookkeeping? So the first thing is you have to record transactions. So it means recording daily transaction, and that will be your sales, your purchases, your receipts, and your payments. So you have to record these daily transaction. The second point here is the task in bookkeeping is organizing the financial documents like your invoices and receipts. Clear? The third point here is the task that is maintaining ledgers for different accounts. For example, your cash account, your inventory. So you have to maintain. And the fourth one is ensuring that records are accurate and up to date. So what we have to do here is that the task assigned to bookkeeping is you have to record the daily transaction, you have to organize the financial documents like invoice and receipt, then you have to maintain your ledgers for different accounts like cash, inventory, and then at the last you have to ensure that your records are accurate and up to date. Okay, now let's move on. We have to discuss another concept, and that is the method. Bookkeeping methods, we call that is bookkeeping methods. So we have two methods. The first one is your single entry bookkeeping. On the other hand, you will have a double entry bookkeeping. In single entry bookkeeping, each transaction is recorded once. The second point here is that this sort of accounting is suitable for small businesses. Okay, and the focus of single entry bookkeeping is that it's tracking the cash inflow and outflow without the complexity of debit and credit using that as a double entry system. But it doesn't track asset, liability, and equity, making it suitable for business with a simple financial activity. And for example, how you do this, like you see here we have a date, and then you will have a description, then you will have income, and here you will have expenses, and the balance will be here. Clear? So let's say if transaction happen and first 2025, and this is, let's say, the opening balance at the start, and let's say this amount is $200. Now transaction happen, let's say, in 3/4/2025, and the transaction is rent related, so mean you have made some rent payment, and that will be your expense. Let's say the amount is 800. So the balance will be, if you deduct the 800 from the 2000, then it will be 1200. Now again, the transaction happened, let's say, on 20th for 2025, and this is, let's say, office supplies, and the transaction is again expense, and this will reduce this amount to 1000. And let's say you have some income, I will say, like on the 24/1/4/2005, you have some a product sale, and the amount is, let's say, 500. Then this will go up to the 1500, and that will be, let's say, the month in, and that will be your closing balance, and that will move on to another month, and that will be your opening earning. So this is the simple bookkeeping system. Now let's discuss the double entry bookkeeping, then how it's different from that of the single bookkeeping. Okay, now the double entry bookkeeping system, here let me write double entry bookkeeping. You know that double entry bookkeeping, each transaction affects two accounts, and that will be some debit and that will be in credit. Clear? Now it is also assisting, or you may say like helps and detail, this I left a little bit detail, and it's detecting errors, and in also maintaining balance record. So it's help the transaction is detailed This transaction is deducting, if you are using the double entry bookkeeping, so that will help you that error is easily detectable, and also balance, your balance records. Now, this double book entry system ensuring, let me write here, ensuring that the accounting equation, that we know that equation is asset is equal to liabilities plus equity, and that is remain balance. And you're using the double entry bookkeeping system, then asset is equal to liability equals O balance. Now let me create a scenario for better understanding. Okay, let's say we have a scenario and for example on 1st April 2025, your business did some purchases, and the purchases is, let's say, office supplies, and that worth let's say $300, and you have paid for this using your cash. So the account here involves will be your office supplies, that is your asset account, and that will be goes up because you are acquiring supply. So your supply increase, you acquired more supplies. The second account that effect that is your cash, and cash is also your asset, but you have paid the cash, so it means the cash will be reduced. You are spending the cash. Clear? So the two involved accounts or your office supply and cash. Now you have to pause a general entry, and that will be like this. You have here general entry, and what you will do, this will be like here. Let me write it. Okay, fine. Let me write it. This will be your date. Okay, fine. Here you will have accounts. Here you will have debit, and here you will have credit. So here I'll just use the sign dollars. The transaction happened on the April. So let's see, and post April 2025, the account is office supplies and also your cash. Your supplies debit by 300 because you have received the asset, and your cash is credited because you have paid the cash. So this is the double entry end system. Now, what is the importance of this double entry accounting system? So let me write that what are the importance of bookkeeping, why we are keeping our book, and what is the purpose. So the first thing is, when this is provide a clear picture of the business financial health. So about financial health, you will get a clear picture. Clear? The second importance of bookkeeping is that it helps make informed business decision. When the investor or the stakeholders know about the financial health and the clear picture about the business, then it will help them to make informed decision. Clear? The third importance of the bookkeeping is that it is essential when you are preparing the financial statement. So it means that is essential for preparing financial statement, and also that is essential for your tax returns. Clear? And the fourth one, I will say that this is ensuring, or you may say like you are ensure compliance with the financial regulation. So this is the importance of bookkeeping. Right? Now let's move on. We have to discuss another topic, and that is computerized accounting software. In this, we will have to discuss the data cycle. First, you have to understand that what we mean by data cycle. Data cycle actually refer to the systematic process by which your raw data is collected, then that data is processed, then stored, and then transferred into meaningful information, and you know that information help to the management for decision making. Clear? So in simple word, data cycle is actually the process through which you collecting the data, and then you have to process that data and then store and then transfer that data into information, and that information is helpful for the management to take a wise decision. Now in this process, first what you will do, first you will have to do the data collection. Clear? Once you collect the data, then you will have to processing the data, and then after processing data, you or have a data storage, and then you will information output. Clear? After this, the final step will be like feedback and control. Clear? So we have to discuss from the start, and that is your order place. First you order placed, and by this we mean that a customer place an order online. So when customer, this is the customer, he placed the order, it means that the data is collected and entered into the accounting system. Clear? After that, the second phase is your transaction processed. So by this we means that order value is collected, and for that you are using the price list. Clear? So customer account, then the customer account is updated. For example, if they are a credit customer, then the receivable will be increased because they are purchasing something, they have placed some order. The second thing is your inventory record will also be updated because they have placed some order and you have to deliver that inventory to the particular customer. So the system processes the transaction. Clear? Now the third step you will have here, right? Third step is the invoice creation. Means your invoice is created. So the invoice is generated. Clear? And invoice, when you create invoices, then that invoice is sent to the customer. Clear? So this means that official accounting document is created. Clear? Now after that you have the phase 4, and that is your data analysis, or you can say that data analyzed. So all the transaction, the transaction is reviewed. The transaction is reviewed, and this transaction is reviewed monthly and your sale report. Clear? Now the data is analyzed, and then that is turned into useful information. Clear? And that information is used by the management. Now we have some key terms that you must need awareness of. The first one is files. That what we mean by files, these are the group of similar record. Okay, for example, you may have general ledgers, you may have receivable ledgers. These are your files like payables, ledgers. Fine. Then the second thing, the second key term is records. By record we mean that this is actually one complete unit of data, right? For example, you may have saved your supplies accounts in the payable ledger. Okay. You may have some, other types of record, and the records. These records have some field. Records has field. By field, what we mean? Let me discuss this. Field is actually, a small pieces of information inside a record. For example, you have here a supplier's name. You may have, accounts numbers. You may like say credit limits. These are the fields and the records. Okay. Now that key fields is a special field that identifies each record. For example, you may say like there's some unique supply code. So by that you identify the record. Clear? Now let's move on. We have another term, and that is your transaction file. Transaction file. As the term indicates that these are the stored record of single transaction. For example, you may have invoices. So these are your transaction file. And at the last, you have a master file. And this is store fixed, and you may say like a standing information and running totals. And this includes your supplier name, the addresses of the suppliers, your year to date purchases. Clear? And at the last, let me tell you some popular accounting software, and that is your QuickBook, your Peachtree, Save. You may say like other software that is popular and used for the accounting purpose. Clear? Okay, now you see here, this is actually the content that have produced by the ACCA. That what is bookkeeping. Let me do this thing. And bookkeeping is one aspect of accounting, and accounting is concerned with processing and recording the transaction. We have discussed all these in a bit detail. Then about data cycle, we have already discussed this, that the customer places order, and then the value of the order is calculated basis from the purchase price list. And then we have discussed other terms, the key terms and the records field and key fields. We have discussed all these things one by one. If you want to read it, then you can read it from here. The data files, records, fields, key fields, and about that I have told you that it might be unique supply code. Okay. Now we have some MCQs that is relevant for you guys. Clear? The first MCQ here is related to the bookkeeping methods, that which the following statement best describe the key difference between the single entry and double entry bookkeeping system. So here you have 4 options. The option number 1 is single entry count only cash transaction. That is not a right way. Double entry record all transaction. Now I will just take the correct one, that which is correct, and I will explain why it is correct. So the correct option here is B, that single entry records on one aspect of transaction, while the double entry both debit and credit aspect. And we have discussed that in a single entry bookkeeping system, only one aspect of transaction is recorded, like cash received or paid. Like it's simpler, but less comprehensive. And this system is prone to the errors and lacks to a complete financial picture. On the other hand, and if you say like in contrast, the double entry bookkeeping system, we have discussed that records have both aspect of the transactions, debit and credit for each transaction, and ensuring that the accounting equation, that is your asset is equal to liability and equity, remain balanced. So this method is more accurate widely used in a professional accounting. So the option number B is the correct. Option one is incorrect, incorrect because single entry can record non-cash transaction, though incompletely. And option C is also not correct because both system can be manual or computerized. And if you look at the option number D, so the option number D is also incorrect, and the reason is because double entry reduce errors. Here you said able to allow for errors, but it actually reduce the errors through its self-balancing nature. So the option B is the correct one. Clear? Let's move on to the MCQ number second. Here, a company implement a computerized accounting software to manage its financial transaction. So, which of the following is the primary advantage of using such a software over the manual bookkeeping? So, here we have again four options, and the option number B that it automatically generates financial reports and reduce processing process. So, this is the benefit, that is the primary advantage of using such a software. You know that when you are using the QuickBook or PHT or Save, these are automated repetitive tasks like generating cash cash flow statement. What I mean is that producing or generating the financial statement that include your statement of general equity, state of financial position, and other things like trial balances and ledger saving time and improving efficiency. So it also minimizes human errors in calculation and data entry compared to the manual system. The option one is you look at the option one, that it eliminates the need of internal control. So this option one is incorrect because internal control are still necessary to ensure the accuracy and prevent the fraud. If you look at the option number C, that it ensures that all transactions are recorded in a single entry system. So the option C is incorrect, as computerized system typically use double entry bookkeeping. If you look at the option number D, that it prevents unauthorized access to financial data. So option B is incorrect because while software may include security feature, it doesn't inherently prevent the unauthorized access without proper control, like password and user permission. So what are the reason that some statement are wrong or incorrect, and what are the reason that while other statement is correct? Now the MCQ number third is related to the data cycle. In the context of accounting data cycle, what is the correct sequence of steps for processing said transaction? So we have already discussed that first you have to place the order, then transaction process, invoice is created, and then data analyzed. So if you look at the option number B, you'll find this sequence: first order, transaction process, invoice created, and data analysis. Clear? These are the clear, because the customer places an order, places in a purchase order, then the sale is recorded in this the system. We have that sale inventory card. We have discussed all these things one by one. Clear? Option now let's look at the MCQs number 4, and this MCQs is related to the key term, that is files and records. In accounting information system, what is the primary difference between the transaction file and master file? This is very important. We have discussed this in a very detail, that a transaction file is a daily activities, while a master file contains relatively permanent data. So if you look at here, the option number B, this one, the transaction file record daily activity, while the transfer file contains relatively permanent data. You may say standing data. So this is the correct option. So when we're talking about this, then accounting system or transaction file records daily activity, and we have discussed that is used sales, purchase, or payment, and it's updated frequently on a daily basis. So your daily sales records, your daily payment, etc. While on the other hand, if you look at the master file, then this contains relatively permanent data, such as customer detail. We have discussed this, supply information, accounting, account balances, which are updated less frequently but used as references. The option, if you look at the option 1, the transaction file stored permanent data, while the master file stored temporary data. This is incorrect, and the reason is the transaction file stored temporary, or you may say like a short-term data, while master file store permanent data. If you see the option C, the transaction file contain of fields, while master file contain record, this is also not correct, because both files contain fields and record, but the purpose differ. Both have the fields and record, but the purpose is different. Now option D is again you say like incorrect, because both files contribute to reporting, and master files are not primarily for the data entry. So these are the reasons that why the option D is not correct. And I think this is the last one, and this is the, wait a minute, okay, here, this is the MCQ number 5, that field entry cards, this again related to field card, that a company accounting system include customer database, which of the following best describe field in this context. So if you look at the option B, that a single attributes of a customer, such as their phone number. So we have discussed this in a very detail, that in an accounting database, a field is a single attribute, or I think I have used the term that a piece of data about entity, such as customer phone number, name, and account balances. And a record is a complete set of fields related to one entity, all data about one customer. So making option A is incorrect, and the reason is I have told you that all data about one customer is called record. If you look at the option C, that describe a file which is a collection of all records, so the entire customer for example the entire customer database. And option D is incorrect because your fields are not temporary and do not specifically relate to transaction, they are part of the database structure. So these MCQs are designed to test your knowledge about bookkeeping, computerizing system, and even data management. And these are aligning with the ACCA management information exam, focusing on a practical application and conceptual clarity. We will continue in the next lecture. Thank you for watching.